All right, we are back after a long hiatus. This is the Down to the Studs podcast with your host, Brett Stein, real estate podcast host extraordinaire. Lots of crazy stuff going on right now in the market. Only fitting that I have one of my first ever mentors in the real estate business, one of my first ever mentors in life, sitting to my left, Daniel Foch, Foch Family Homes. Keeping it in the family. Thanks for coming, baby.
Yeah, my pleasure. Thanks for having me. I think it's been 5 years since you had your license? We were doing
a little bit for everyone watching. We'll say 5 years, a little bit shorter than that.
But we were grinding Facebook ads and calls.
Before we were grinding, obviously doing everything to code, to RICO. We were grinding while I was studying to get my license.
Inside sales agent.
Oh yeah, baby.
That's fully above board.
And you really got me started on the grind, and how much work it takes to be a real estate agent, and how much work it takes to be consistent at it. And I know I develop a lot of my habits from you, so I thank you for that.
Yeah, man. I mean, I'm glad. And then you're killing it now, so.
Listen, doing my best, and also kind of following you as well with all the content that you put out with I know you are a jack of all trades. You are one of the hardest working people in the business from my perspective. Podcasts, huge land deals, financing, real estate sales, doing all sorts of different stuff, and also an awesome daddy.
Yeah.
And you're looking jacked, man.
Thanks, man.
You're finding time to stay in the gym, which I am not.
It's necessary for me. I can't focus if I don't work out in the gym.
Right.
But yeah, I mean, I just love this business, right? And I think I just got lucky that I fell into it. My parents were in the industry I've been in the industry for 30 years. I grew up surrounded by it, and there's when I was growing up, I was fuck, I don't want anything to do. I can swear on this podcast.
Yeah, you can swear on the podcast.
Cool. I was I don't want anything to do with what my parents had to do. I just didn't. I had no interest in real estate. And then I went away. I was working on a farm for a bit, and then I was went away to Switzerland to the army because I'm half Swiss. And then I was I came back, and then I for some reason just got into a university program and decided to jump in, and I got so lucky, man. It was just a stroke of luck that this is the industry that I'm ridiculously passionate about.
I feel the same way of just kind of how it fell into my lap. So we got connected through, and he'll absolutely love this shout out, through Jake Ringwald.
Yeah, he's gonna love it. I actually owe that guy a call. Talking about owing guys a call. He keeps biting me. He's like, you need to help me find an assistant. I'm if you find an assistant, I'm hiring that, because you can't get people in this space right
every
now.
time I come out with a new podcast, he's like, dude, what the fuck?
Yeah.
When am I coming on the podcast? And I wanted to do a whole thing where I wasn't having my best buddies on the podcast.
Yeah. Well, you need to expand your audience. Right?
Yeah, for sure. He's sending it out to all the same people that I'm sending out every podcast to. And all my buddies, the only people who are watching this thing, know all about Jake anyway. So who cares? But we'll get him on eventually. But he connected us. You guys went to Guelph together in the real estate program. Yeah. Jake was a guy, and again, I hate that I'm talking about him, but he was a guy who was real estate from the day he came out the womb.
Yeah.
Right? He knew he was going to be a commercial real estate agent. He fucking knew. And
look at him. He's cultivated those skills his whole life. He's crushing it.
He is Mr. Real Estate, Mr. Multifamily, Mr. Apartment Building, and I mean, from having that plan from so early on, it's something that I looked at and I was I never want to do that. Right. I never want to be a real estate agent. Never, ever, ever. And I saw all these people, because I mean, when I was coming up, the push was commercial. It was all commercial was new and sexy. Nobody I knew was going into residential real estate. It was all commercial leasing.
Well, especially if you grew up in Toronto, right? And it was everybody wants to be a broker, a senior vice president.
Go work for CBRE or wherever, right? And
give away 50% of your income so you can have a publicly traded company on your on your business card.
So
sorry, guys.
It's strange how I did so many different things, and then it all came back to real estate, and I feel I couldn't be doing anything else.
Right. I agree, man. Since I met you, that I was this guy. I knew I was this guy's absolutely gonna fucking clean house in this business. Seriously.
I appreciate it.
And when we started, I was I want to partner, work together, whatever. But it was I could see you just going and just crushing it on your own, and you're absolutely killing it.
Well, I think, and one of the reasons why we got along so well is like it's pretty quick for me to tell if like someone who I'm talking to is like a good guy and like we get along, right? And so many people in this business are so pompous, and you kind of have to fake smile and fake get along with them for the few interactions that you have. But I feel like, you know, we've always shared the fact that we're genuine, and we say what's on our mind, and you know, that can lead to bickering and arguments. That can lead to, you know, throwing back beers and having a great time. And I do want to get to a little bit of bickering on this podcast and back and forth, because I know you have some crazy views on the market. Not crazy, but true.
They were crazy like 2 months ago.
Yeah. And so I want to kind of go through pre-pandemic real estate market, walk us through the pandemic as best you can to where we are now, kind of really abbreviated version. What's gone on? What are like the major points, I guess?
Yeah, sure. So I would say, I mean, you almost have to go all the way back to like 2016, 2017. I guess like when you and I were working together a little bit, right? Maybe a little bit. I guess it would have been after that. But 16 in Vancouver, they imposed a foreign ownership tax. It decreased the market by like 20%. 17 April, they imposed a foreign ownership tax in Ontario, in the Greater Golden Horseshoe. Dropped the market from like April to August by like 30 to 40%, depending on the area.
Right. Well, I remember in 2017, flashback, I was working in like Richmond Hill, Thornhill area, and was working with a guy by the name of Ken Wilder. Shout out Ken. One of my first introduction into the business of real estate, and I think it was right in 2017, and it was like the year before the hottest thing ever. Yeah. People were waking up and making $300K a year. Yeah. Like people who had never seen that kind of money before ever. Yeah. And all of a sudden I show up, and this is my first introduction into real estate is literally people are wandering around the office not knowing what to do. Right. They're like, their phones aren't ringing. It's fucking September, and they've made like $30K, and last year they made $300. Right. And they've got to put their kids through school and do all this stuff.
Well, they got to pay for the new S-Class at least, because they thought that they were going to have to sustainably make.
And we'll get into that too, because that's a crazy thing about being in a fully commissioned business. So, and you're talking about there was a tax imposed on foreign ownership, and I believe like in Richmond Hill, Thornhill, a lot of foreign buyers were buying these homes.
I mean, it was clear at that point that foreign buyers were driving the market, and they were causing the exuberance that led to unsustainable price increases. I think it's funny because the market was just rolling over in March, I would say, of that year. Like kind of you're starting to see a supply flood. Prices were plateauing, and the government was a little bit late to the party. But that was the final nail in the coffin, I think. There was like a couple of B20 things, like increasing the stress test, blah, blah, blah. Then prices came down. Couldn't find a bid in the market. Like, August, it was like, seriously, people were selling for... I saw like apples to apples comparisons of like 40% less. I think Newmarket, like actually on average, a median price was like 39% from April to August of that year. And then, the market traded sideways for a little bit, and interest rates started coming down, right? As rates started coming back down, the market started heating up again, and we're starting to see it, right? Like I think like just before COVID, like the condo market was like absolutely on fire. Yeah. It's like hottest leasing record, prices were growing. The divergence from single family detached was like closing, like the city was doing great, and then boom, COVID happened, right? And then you started seeing, like I was documenting it pretty early, there was a couple of major factors. So the ones was like you were starting to see city agents driving further and further from their office to do deals, right? So it was a kind of documentable exodus from the city, and everybody knows now in hindsight that happened, right? Qualitatively, you can say, no one's fucking in the city. Nobody was in the city for a bit. Right. Everybody's going to get a backyard and a pool or whatever. And then, so there was that. All the Airbnbs were hitting the market because nobody was coming to party in the city or whatever people do at Airbnbs in the city. Condos were vacant, like vacancy rate on condos went up like crazy. Oh, yeah. And so for a couple of years, but then what happened was, a handful of central bank policy, so monetary and fiscal policy, you know, the monetary side being the central banks and the fiscal side being the government spending, CERB, et cetera, just like flooded the market with money, right? So we outsized our monetary economy to the point where like everyone's loaded now. Or if you own an asset, you're just like loaded, right?
Right.
And Canada was already like a weird country in that way. Like it was like, I think one of the big attractive factors to immigration was like everybody sees everybody driving a C class around here. It's like everyone's in a Benz and like a nice house and whatever. Like it's like you come to Canada and it feels like everyone's upper middle class, right? Or at least in the GTA,
right? Especially in the core of the city, right? Like that's why I always talk about Toronto geographically. Like it's a very interestingly laid out area, right?
Yeah.
Like when you talk about the epicenter of Toronto and then you just kind of keep expanding and keep expanding and keep expanding, it's very different. Like people try and compare markets all the time, right? You try and compare to New York, you try to compare to Vancouver. Like we're talking about islands, right? This is very different. I mean, what Toronto is now is much different than what we called Toronto 10 years ago, right? So, and I feel like and I know you're talking about people moving outside of the city, but answer me this question. Do you think that in 10 years, who owns detached or just freehold properties in the city of Toronto? Like there's only a finite amount, right? So in my mind, when I know you talk about quantitative, qualitative, all spins around in my brain. I like to try and look at everything as logically as I can because I'm not as smart as you are.
I don't know if I'd say that. I just know a lot of big words.
Okay. I just think there's a finite amount of these freehold properties in Toronto, and in 10 years, they're only going to be owned by the most fortunate people in the province, and those are most likely going to be the wealthiest people, and those properties are going to be the highest priced properties.
Yeah, I mean, I don't disagree with that thesis. I guess it depends. Like I think that there's a lot of different ways that the future of Toronto could play out, and that I guess is why it becomes important to examine sort of like what's happening with the economy right now, right? Like I don't know. I don't think I would call this a likely outcome, but I think it's a potential one. Like Toronto could end up like Los Angeles as a result of the disparity that's happening right now, right? Like that's within the
go into that more
so in Los Angeles you have like a very small middle class. It's a very disparate place, right? So you have opulent extreme wealth, right? You have $20-30 million mansions, Beverly Hills, blah blah blah, and 6 kilometers away you have Skid Row, right? Again, I really don't see it happening in Toronto, but it just like when you start to see the cyclicality of urban areas and what happens as a result of encoding disparity. So like we've created, when you pump all this money into the economy and assets inflate, the people who have them get way richer and the people who don't get relatively way poorer, right? When the cost of living starts going up, all of the people who don't now have same income or decreased income, maybe because they're working in the service industry or whatever, right? And then they also have to spend more money for regular things or for if they ever want to buy an asset or pay rent or whatever.
I mean, even as simple as, not so long, when I bought this house and I spent $1.125 million on an end-road townhouse with parking, 3 beds, and a basement, like, okay, you could spend under $1.3 million and buy something like this and either put a tiny bit of work in or even buy something like I was looking at turnkey properties for under 1.4 million. That's not even close to a possibility. Mm-hmm. Back in the day when if I got a condo buyer and they were like, my budget's $1 million, I was like, oh my God, amazing. We could buy any condo you want, right? Right. But now those condos are 1.2, 1.3 million. Now even the chance to buy something that needs to be gutted is like at 1.4,
right? At
least.
Yeah, and so the question becomes like, why, right? Like what changed to cause that? And to me, it's like 2 things changed. One is the amount of money, and 2 is the price of money, right? So interest rates went down and the amount of money in the system went
Right.
up, right? And so when you have that, you have people talk about Canadian real estate as excess demand, right? Like, and it is. There's more people who want to live in Canadian houses. You can use Toronto as an example. There's more people who want to live in houses in Toronto than there are houses in Toronto. I think that will remain true for a long time. But you also have to think about excess demand as the amount of dollars chasing a house in Toronto, right? Not just the amount of people. So it's not just the number of bids in the market, it's the size of those bids.
Right.
As you start to bring the interest rate down, the cost of that money comes down, so the buying power reduces, right? There's no way they can take a lot of the money that was put into the market. They can't fucking get that out. Like, they literally cannot. It's like the financial system is so broken, right? But the way that they can change the way the credit system is bond yields go up, so the bond market is starting to pull money, request money out of the market, saying, hey, there's too much fucking money in the market. Bond yields start to go up, banks start to put money into bonds rather than mortgages, right? So that's just fundamentally how it works. Because like your RBC, you're like, there's the two least risky things I can do is either give Brett a mortgage, maybe not you're super risky, but no, but the two least risky things I can do is give Brett a mortgage or go buy a bond, right? So if a bond yield goes up, they're going to have to charge you more money now to compete with that bond.
Right.
So that's on the fixed side. Then the other side is the bank. This is the shit that we're all hearing about. Everybody in the country now apparently follows the Bank of Canada, which is crazy. I don't know if that's because of me, but no, but like everybody's paying attention to like what the Bank of Canada is doing.
No, it's because there's
everyone has a fucking mortgage.
80,000 real estate agents in the city of Toronto, and they're all reposting what you're posting.
I don't even know.
They don't even know what they're posting. Oh, Bank of Canada. I guarantee you, if we did a poll, like 85% of real estate agents don't even know what the Bank of Canada is.
No, I don't think they know how. Yeah, you're right. Like, well, they kind of do, but like they don't really. They're like interest rates, and then it's like, I don't know. It is funny, right? Like, it's funny too because like the content is just so fucked. Like, it's just broken the market. That's why like I literally just got on TikTok recently because I was like, TikTok needs like a bear. Like they need somebody to come in here and be like, you guys need like a dose of realism in this platform. Like everyone's like, just like buy a condo, flip it, make $1 million. It's like no. Like,
well, a lot of these TikTok stars, and I've spoken to some of these guys who are unbelievable with content, but they don't sell real estate. Right. They make money off of their Instagram accounts, YouTube's accounts. But
they don't make that much money, right? Like, I mean, realistically.
I think sometimes they
like $100,000 a year or something, like 150. Yeah, maybe. I mean, like,
I don't know. And then they get these deals from other people, sending them stuff and advertising, whatever. But so with that price change, right? Like, and you're talking about the demand and the amount of people that money have, and people say, well, Toronto's the largest growing city in terms of population. So now when you're saying what you're saying, I'm thinking about, well, who cares about population growth if none of these people can afford to buy these homes, right?
And absolutely.
Like the new immigrants are coming in.
Yeah.
It's not like they have a condo in Toronto to sell so that they can get their down payment. Because most people who are getting into the market right now, they either have money from mom and dad, I would assume, or they're selling a condo, selling a smaller house in order to upgrade. The new immigrants coming in, this population growth that we have that we think is just going to sustain the market, like no problem, they don't have that down payment, right?
It depends, right? Like, so there have been, they're allowed to buy with different standards than domestic Canadians. Like, if they have a marketable skill set, they can actually get a mortgage without having a job if they can afford the payments for a certain period of time, so they can get a job. These are and a lot of these programs are kind of unwinding a little bit because there's risk in the market now. But I would agree with you. Like, I think that you're running out of rich people to immigrate to Canada, right? Like, and the question becomes, is Canada still compelling for rich people to immigrate to? Like, and I don't know, right? Like, I'm not an immigrant, and I work with, I'd say quite a few, and I talk to as many of them as I can.
I think pre-pandemic it was.
Right, I agree. And so
I think a lot of people's opinions changed on Canada and Toronto and Ontario with the handling of the pandemic. Like, beforehand, it's like, oh, I want to move to Canada.
Right.
Now nobody wants to move to fucking Canada.
Right. But I think that like a lot of this happens, and like I'm really not a geopolitical guy, so like we should probably move on from this one, like eventually. But like I'll give you like kind of a quick summary on what I think is going on in the world right now. I think that you are seeing a shift in power globally, and the countries that a lot of people migrate from into Canada are the countries that are ending up with the power, and they don't like a country that is moving further left and exercise. Like, you literally saw the Ottawa, the Chinese consulate in Ottawa, like, reaming out Justin Trudeau on Twitter, right? So I think you have China, India. I mean, Russia would be a good example, and obviously a touchy subject right now. But, like, there's sort of like this. There's a lot of shit going on in that part of the world where we're kind of like left out of it. North America is like, and I just don't know if it's super compelling. Not just economically, it's not compelling for people to immigrate to Canada. But I don't know, because I'm not in that position, whether or not it's like Canada is offering a compelling social environment, a cultural environment for the people who want to migrate from those countries, right? Because they're communicating with their actions, with their politics, with, like, the way that those countries are running, that they have different values than Canada,
right? So we'll move on, and we're talking a little bit about the price is going up and all this stuff. Okay, so now we're at a point where obviously interest rates are increasing.
Yeah.
And we are, at least I feel it, the real estate agents that I speak to, and we'll see when the next stats come out, and we'll continue to tell that story, but we're seeing a little bit of a lull in the market, for sure. We're seeing less competition than we were seeing. We're seeing less bidding wars. We're seeing less crazy numbers that real estate agents can brag about selling for $300,000 over asking. And so that's a direct result of the mortgage rates?
It's a tough question. I would say yes and no. So I think that January to February, whatever happened, like that huge price escalation, that was very late cycle behavior. That was like a melt up. I think that, so we had one rate hike happen at that point, right? 25 basis points. And I think people were like calling the bluff, like, oh, this is it, right? Like, I actually think that first rate hike, almost, you could argue that people were rushing in to try and lock in a lower rate before the rate hikes happened, which might actually be the best move. I don't really know. I mean, time will tell. But if rates go up 200 basis points, so 2%, then, your capital cost is actually going to go up enough that it might actually be worth it, right? But anyway, so the philosophy was, I think you're seeing, that was like peak FOMO too. Yeah. Realtors were like, fucking prices are going to get out of control, like crazy. Like, it was literally like, I have seen a market like that in 2017. Like, March of 2017 was the exact same.
Well, the sentiment, I remember when we had that first increase, like, we didn't really care.
Right. And that's what, yeah, exactly. And everyone was like, that was the thing, right? It was like, it added,
this is all they're going to do?
Like,
amazing.
That's it.
Buy. Yeah.
Right. But then what happened was you actually reached an organic peak, right? Like, eventually people were like, there comes a point where there's like, again, qualitative, quantitative, or whatever you want to call it. But like, on the psychology side, people are like, I don't want to pay that much money for a fucking shed in Keswick anymore, so that prices come back down.
Yeah.
And then, or they're like, I'm just going to rent for a couple of years and see what happens. And then, or maybe I'm just never going to own a house again. But then the other part is, at a certain point, you can't buy a house anymore. Like, prices get high enough. Mm-hmm. Every time prices go up, you lose buyers, right? They disappear. There's a group of people that can no longer qualify at that average price. So eventually the economics tighten that price back down to within the realm of, oh, now there's more buyers. Okay. And so I think we were reaching that plateau. And that brings me back to that kind of 2017 thing, where in 2017, we had the exact same thing happen right before the policy error. From my perspective, I think that the non-resident speculation tax was a policy error. And I think that the current budget that we just saw was a policy error, right? And probably on the Bank of Canada side, same thing. Like, they're literally starting their rate hiking cycle after the market peaked. Yeah. Like, and I was calling the top in February.
You're seeing an organic, you're seeing, from your perspective, you're seeing an organic slowdown. For sure. And then you're accelerating that with the rate hikes. And then, like, I mean, the way that I've been explaining it and thinking about it is, think about the stock market. What drives the stock market? News.
Right.
News drives the stock market,
Right.
period. It doesn't matter how your company's doing.
Right.
Sure, you want to release your financials and your earnings. That's news.
Right.
And that's driving your stock price.
Right.
All of a sudden, you start flooding the internet with all these articles. Every single real estate agent is posting about the rate hikes. That's news.
Right.
And from a lot of people that I've spoken to, we're just going to sit back and watch and see what happens for a little bit because we're going to see a big drop, right? So they're not buying. And then because they're not buying, they're correct in their statement that they're going to wait for a drop, right? A price. But I'm thinking about like what actually needs to happen for those prices to drop. So, and comparing it to 2017, and you know more of this than I do, so correct me if I'm wrong, but we saw an influx of foreign buyers who were buying houses that before, let's just say, were selling at 1.7 million. Now they're selling for 2.2 million.
Yeah. They're
buying these houses in Richmond Hill for 2.2 million. Boom, boom, throwing offers out without even seeing these houses. Everybody's laughing. Everybody's making money. There were some people who chose not to sell at that time. Maybe they were greedy. They thought that they could get more later, or they just weren't ready to sell. They didn't have anywhere to go, whatever it might be. All of a sudden, you tax those people. The foreign buyers are now no longer in the market. And the guy whose neighbor sold for 2.2 a month ago thinks he can sell for 2.2.
Right.
So he lists his house for 2.2.
Right.
And his house sits on the market forever until he lowers it to 2.1, then to 2, and then to 1.9. And then he just decides to take it off the market and never sell it.
Right.
Right? So like, I feel like that's where we could end up with, my neighbor across the street sold for 2.25 million. If I wanted to sell, I'm looking for 2 million, no problem. I am looking for 2 million. And if the market isn't going to give that to me, then my house is going to sit on the market forever and it's going to be a stat.
Yeah.
And all the other houses that are sitting on the market are going to be a stat. The days on market is going to go up. And eventually the people who need to sell are going to keep lowering their prices until they sell.
Right.
Right?
Yeah. I mean, there's a couple of differences, I would say, between now and then. But in the micro, you're absolutely right. I think that when you just think about consumer behavior and people listing their houses and failing to sell and whatever, but then it also ignore that I would say that's probably greater than 50% of what could happen. Then there's
seller expectations being too high.
Exactly. And eventually those people may need to sell, or they can just hold it forever, and maybe we'll actually end up like Germany, where people hand their houses down to their kids rather than, because their kids can't afford houses. The other piece of the puzzle is you have record high people getting into variable rate mortgages, right? And so rates go up, their capital cost goes up, right? And so, financial stress can begin as a result of interest rates going up. Interest rates go up, the economy we're going to be in a recession. We will be in a recession within a year. I would say it would surprise me if it took longer than the end of this year. I would expect we'll be in a recession within 6 months.
Right.
People start losing jobs.
Don't worry, people. I'll save us.
Right. Well, I mean, but the reality, I actually believe that you probably could. People start losing jobs. Our generation, we, especially in Canada, in the US it's a little bit different, but our generation has never seen a bear market, ever. In the US, shit got fucking crazy there. But that barely impacted us because we were in a good, pretty solid financial position and started tapering and reducing rate, started quantitative easing, reducing rates, etc. It's different now. It's, our run-up is very different. Canada doesn't have a diverse economy. We depend on housing a lot. Everyone sitting in this room right now is making money off of the real estate space, right? Well, you are technically, because you're filming guys who are talking about real estate, right? So, it's obviously not your primary income, but I think it's something greater than 60% of the Canadian economy makes money from real estate, right? So you start to see contraction, and that trickles into household spending, etc. Things start to come down, the whole economy contracts. That's the kind of scary scenario. But the thing is and referencing the US as well, everyone's and it's all the realtors who just want fucking clickbait headlines. It's guys who are saying market's going to go up 30% year over year. I literally saw a thumbnail on somebody's YouTube. It was market's going to grow 30%. And then his next video was market's going to crash. And it's okay, cool. So, but the market can't crash in Canada. I'll say that. And I'm probably the most bearish realtor that I know. The market cannot crash here. The reason it can't crash like the States is because like, and a crash is like a peak to trough, like big sell off, right? In the States, they have foreclosure and they have something called jingle mail. And we have jingle mail in Alberta. Jingle mail is basically like the jingling refers to the keys. You can go and like hand the bank your keys to your house and be like, I don't want to fucking pay this mortgage anymore. And then they'll just sell it.
Right.
And in that case, if you're forfeiting the house, they're selling it. They have no obligation to protect your equity. In a foreclosure, the bank literally takes your house from you. They're like, you didn't pay your mortgage, I'm taking your fucking house. Or you got 30 days to square up, otherwise I'm taking your house. And then they sell it and they have, again, no obligation to take protect your equity. In Canada, you know, we have a lot of more socialistic policies, more socially conscious policies, let's call it. I would say socialistic as well. We have power of sale. So in Canada, or in most real estate economies in Canada, I think Alberta and there's a couple of other ones do have foreclosure. But in most real estate economies, if you're a bank, if you stop paying your mortgage and I'm lending you money, I have to go to the court. I have to say, hey, I want to exercise power of sale. And then the court has to issue a document. That document stipulates how much I can list the house for, at what time I can do price reductions, how quickly I can reduce the price, et cetera, et cetera, et cetera. There's like this whole list of documents on how I can sell your house, and it's designed to protect homeowner equity. So there isn't really a fire sale scenario. Like, in order for prices to drop 50%.
Some, like people say, like, I mean, I remember since the beginning of like my first day in real estate, one of the first things I heard a client tell me was, find me power sales.
Right.
But meanwhile, I see some power sales that are selling for $600,000 over asking, and they're crazy, right? So like that's not just because it's a power sale doesn't mean it's a good deal. Doesn't mean it's a reduction in price.
No, if anything, like there's more people doing what your client's doing, and if anything, it's actually like more competitive because everyone's like, oh yeah, we're gonna get a deal on this freaking thing, right? Exactly. So I think it's like anyway. So the main part of that is like in order for prices to come down fast, you need people to reduce prices fast. But the reality is people only have to pay their mortgage once a month, right? So if I stop paying my mortgage, it's going to take 2-3 months for the bank to be like, all right, okay, this guy's probably done paying his mortgage. I know, maybe we should start trying to move this place, right? And so the next question is, are investors or who is the most liquid seller, right? Are investors going to start cutting their prices by 50% overnight? No, because they have cash flow if they want. If they're technically investors, not speculators or whatever. So they're just like, yeah, I'll just keep the house and rent it out or whatever, right? So the crash style of drop isn't like it functionally, mechanically cannot happen in Canada. So what we need to do is start thinking about like people like you and I think our primary job is to help clients. Well, we literally have a fiduciary duty to help clients make a decision in their best interest. So we need to know what that is. And what that is in a bear market, in a market that is clearly moving down and has all of the signs of headwinds that it will continue to move down for a period of time, is we need to manage downside risk, right? We need to help people find a house that they're literally not going to give a shit if the market, like if you're selling mostly residential properties, it's like, let's find you a house that you don't like. You literally wouldn't care if it dropped 10% overnight because you're so fucking in love with the house, right? Especially if you're in a market that's more of a buyer's market. Like, let's start having those conversations. How do we protect ourselves? How do we make decisions that, how do we come up with a proper strategy where it's like, yeah, okay, it does come down 10%, but maybe I'm going to go buy, if I'm an investor, I'm going to go make sure I'm going to have some cash to buy another one.
There are huge problems right now, and I mean, as a real estate agent, I hate real estate agents, so I'm pretty sure you feel the same way. Yeah. And I feel like a lot of our problems, or some of our problems, are caused by real estate agents who, quite frankly, don't know what they're doing.
Right.
And maybe they sell a few houses a year, and they hear crazy market, crazy market, crazy market, and the house comes up one day on the market, and based on their experience, whatever, they convince their buyer to go in on day one and spend $500,000 over asking,
right? Not
realizing that, maybe if you waited till offer night, there probably wouldn't have been any offers because there's no parking, the frontage is only this, that, and I'm seeing that often. I mean, I was involved in offers a couple weeks ago, and I was waiting. There were no offers. It's 7:00. They're supposed to be reviewing offers. The listing agent's saying, well, they're maybe waiting for one, and I don't want to submit my offer until the other person submit theirs. Mm-hmm. I think it was listed at let's say $800,000, and the place was probably worth around 1.1. And all of a sudden, the offer came in, and the agent called me. He's like, I have no idea what just happened. She just sent me an offer at a ridiculous price, like $100,000 over the last comparable. And she was the only offer. And let's say my offer was at 1.1, they spent 1.25. So they literally won the bidding war with only two people by $150,000 when they could have spent 1.125 and won the house. And that's because there's too many people in the city who are real estate agents who are helping drive the market, who don't know what they're doing. But at the same time, in these times, whoever bought that house is probably a young family, great people, sit on the couch, watch the game with them and have a beer. But the reality is, if they were to sell their house tomorrow, it would only be worth 1.1.
Right.
And they paid $150,000 more than that.
Right. Yeah, I mean, man, like that shit shouldn't happen, right? Like, and a lot of people talk about like opening up the bidding, right? Like Justin Trudeau during his campaign promised that he would get rid of the blind bid, and I don't think it actually, like, Australia has open bidding and their prices are as out of control as ours, right? But I think it'll eliminate cases like that, right? And it'll eliminate cases where agents are so fucking lazy and they don't want to price a house properly, so they rely on the market to price it for them, right? Like, I think we do need tools to start eliminating micro risks, and that's a very good example, right? That to me is like why you're paying an agent, why you should be comfortable paying an agent 5% or more. Like, you can overpay for a house very easily by 10 to 20%. Like, what was that house worth? 1.2?
Yeah, let's say 1.1. They spent 150.
They literally overpaid by 10%. Yeah. If they had and it's probably because freaking cousin Joe was giving them a kickback of $25,000. It's like, okay, cool, guys, you just literally forfeited $150K to get $25,000 cash kickback on your commission. Right. Like, the cognitive dissonance around people thinking about the wrong number, right? Like, people always say that to me. Oh, can you reduce your fee on the listing? It's like, if that's what the number that you're focused on, you're thinking about the wrong number. Yeah. Right.
No, for sure. And so, okay, so getting back into interest rates, obviously we're going to continue to see a few more hikes. But when I'm trying to think about it logically, we're really only at the number now that we were at pre-pandemic.
Right.
Right?
Yeah.
So people are concerned about the rates. And I know you were talking before about, the buying power, but people are so concerned about the rates. But it's like, listen, we lowered the rates in order to make it easier on everybody in the economy within the pandemic.
Yeah.
And now we're out of the pandemic.
Right.
And they're coming back to normal, right?
Yeah, I mean, I think the chat, like, it's I guess it's not that complex, but it's a little bit more complex than like this. The Bank of Canada doesn't operate independently. Like, they're irrelevant to what's happening in the world right now. Like, completely irrelevant. They follow the Fed, and the Fed, we in Canada, I don't think we're very honest about inflation. Like, it doesn't include used car sales, it doesn't include shelter costs, etc. Saying inflation in Canada is in the 5% range is complete bullshit. But in the States, they are reporting inflation at 8.5%. That's fucking high. That's 40-year high. So we know that the Fed is going to increase interest rates, and they're going to take that shit seriously. And the reason that they're going to do that is because they have to protect their status as a global currency, right? If the US dollar starts to get debased as a global currency, that's bad for, well, at least for the US and their objectives in being the world police and whatever. But we have to have close to approximate parity with that, right? So that the Canadian dollar doesn't get fucking destroyed. Otherwise, we have other problems to deal with. So this most recent rate hike is the Bank of Canada increasing to basically in response to U.S. inflation, because Canadian inflation doesn't fucking matter. Like, Canadian inflation is probably double what it is in the U.S., but like, we don't tell the truth about it, so it really doesn't, like, it's a completely irrelevant metric, right? We know inflation is high,
right? And
we know that the U.S. is going to do something about inflation being high, and so the Bank of Canada is going to do something as well, right? So we need our interest rate to be similar to the U.S. so that the Canadian dollar doesn't get destroyed, basically.
So where do we go from here to balance? Where do we go from here to find a happy place where everybody can be happy and frolic around in their backyards and not be panicking?
You can do that anyway, right? Like, I think that I think that people just need to like, you got to understand what's going on, and then just feel at ease and at peace with it, and like we can only do what we can do, right? And then but yeah, I think like I think you're talking like bigger picture, obviously, but I would say the Fed will likely increase rates quickly to try and cap inflation. We're going to find out pretty quickly whether or not inflation is actually based on supply chain issues and a bunch of other shit, or if it's other problems, or if it is more monetary problems. But they're going to increase rates fast, cap inflation. Inflation should start coming back down. They try and keep it around 2%. If they get it to 2%, they're going to fucking drop rates again fast, because the global economy is going to be fucked up in the next year, very messed up, right? If you double interest rates, then did the fan just go off?
Yeah.
It's a trip. My white noise. Yeah, so if you double interest rates, that's going to have a huge impact on the global economy, right? Huge. Yeah. And so, they're rushing to get inflation under control quickly, and it's going to cause a recession, unfortunately. But a recession is not as bad as an inflationary environment.
And it's funny, it's so similar to, I don't know how long we've been talking. We're probably boring the shit out of all you people, but this is life. You can compare this directly to the pandemic and how
you just cut it into 2 episodes. It's too long.
The handling of the pandemic, right? Look at any government, right? Cases go up, mandates as fast as possible. Cases go down. Okay, guys,
dude,
go out and
it's
enjoy.
actually so fucking funny that you say that, because it's the same thing. It's literally them trying to control a fucking curve. Yeah, that's it.
After it's already gone, right? So it's reactionary rather than again, not a smart guy. What's the opposite of reactionary? When you preemptively solve the problem, right? So in my head, it's okay, we could have fucking you see the market going crazy. You're telling me that, let's just say the Bank of Canada, there's 2 guys sitting in a room and they're not things are crazy. We should probably try to get at least a little bit of moderation here. How do we moderate this so that we don't end up here to here to here to here? Right? And there's got to be ways to do that. I mean, in my head, I can think of a few ways, right? But you wait till it gets so crazy, and then you react. Right. That's how you have a crash, right? Yeah. So just like with the pandemic, it's no different. You now, and I would think that over time, some rate hikes, slowly, patiently, let's massage this into the consumer, so that everybody can remain calm. But now all of a sudden, every fucking 2 weeks, you're seeing article, and it's pushing heavily on people, right? For sure. Bottom line, this was done too fast. It's being done too fast. Is that the point?
Yeah. Well, I think, but it has to be, because again, the central bank's mandate is to control inflation. They should have not let inflation get out of control. That's the easy way to control things, you're saying, right? Preventatively, prevent inflation, right? Don't be oh fuck, oops, sorry guys, we let it get out of control. Yeah. Now we're gonna decimate the economy. It's maybe look at it when it's 7% and be hey, we should probably start, or when it's 3%, it's oh shit, that's a lot higher than it's supposed to be. Let's just But that was back when they're oh, it's transitory, and it's oh, it's supply chain disruptions, and that might be true, but fucking fix supply chains too then. I'm not. It's so easy to say because we're just 2 dudes sitting here at the very bottom of the supply chain, right? And it's well, why don't you guys just stop making stuff in China? It's well, it's not that easy, right? Or yeah, sure, Brett, but do you want to pay 5 times as much for your T-shirt? Right. Probably not. And that's inflationary too. So I mean, it's a very complex problem to solve. I just don't know I don't see a way in which they're going to be able to do it that'll be that's not going to suck. There's it's going to be painful for sure, I would say. But inflation would be more painful. If you're paying $30 for broccoli, that sucks.
Yeah, oh yeah. Broccoli sucks. But listen, bottom line is, and you did bring it up, that the Canadian market is different from a lot of other markets in terms of real estate, in terms of having that cushion for a crash.
Yeah, just mechanically. Yeah. I think, I'll say this. I think that prices from peak to trough, they're going to go down a lot. It wouldn't surprise me to see prices come down 30+%. Right. But it's not going to happen fast. It won't happen nearly.
But meanwhile, 30%, I don't know. I remember seeing something that you posted. 30% would take us back to October of last year.
It is October of last year.
So it's I was pretty happy in October of last year. I'm pretty sure you guys were all happy in October of last year. Fine, take it back. Yeah. But I think that also, and all these stats and numbers and percentages are all based on averages, right? They're all based on taking a look at all the data.
Yeah.
But I think that does still leave an opportunity for buyers, for people to get into situations where there is no competition, right? So a house that would have sold for $1.8 million 3 weeks ago might sell for 1.55 because the sellers have to sell, and they bought something else, and it's an opportunity for you to get a deal. That buyer who buys that property, let's say for 1.55, if instead they said, well, I'm going to wait for prices to drop, the prices might drop, but that house might be worth in 6 months 1.65. Right. So it didn't drop as much as the deal that you could have gotten right now.
And if interest rates are still increasing, your cost of buying goes up. Like your capital. So most people haven't done that math, right? Like that's the primary thing I think most people should be doing right now is, okay, sorry guys. Okay, if my rate goes up by 2%, right? Then okay, how much more am I going to pay on my mortgage? And if I think prices are going to come down less than, if it's 50 grand over my mortgage, which it could be on a $2 million house over 5 years, if I don't think prices are going to come down more than 50 grand, then I should still be buying, right? Because it's like either pay it on interest or you pay it on price.
And you spoke about variable mortgages, which 90% of the market is going into right now.
I think 60%.
60%? Okay. Close.
Yeah.
There are several banks that are not adjusting your actual monthly mortgage cost, right?
Yeah.
So your percentage of interest is going up when the rates change, so you're not paying as much principal, you're not building as much equity. But I mean...
But yeah, most people in Canada, they literally just are buying a payment. Like they just think, you're just committing yourself to a liability.
Nobody's cared about, paying off your mortgage since our parents were trying to pay off their mortgages, right? Like nowadays the bank is... I don't know if they used to do this, but they literally fine you for trying to. They don't want you to pay off your mortgage. They fine you for paying a certain percentage of your mortgage off. Yeah. So if your payments aren't changing and your cost of living, other than inflation and all this shit, isn't changing in terms of your mortgage cost, then it might be worth it to get into a variable rate at 1.75.
Yeah, I mean, and a lot of people are still buying variable rates. Like, are they buying with variable rates because most people are calling the Bank of Canada's bluff or the Fed's bluff or whoever, but they're basically saying, look, the rates are going to go up and then they're going to come back down fast. And I would completely agree with that. I just think what happens in the process of them getting up. And I think I would estimate, like, again, if we see a 30% peak to trough kind of decline in prices in Canada, that's going to take a long time. I would say that's probably going to take no less than 2 years, right? For it to kind of like stabilize at the bottom. Like I think you'll see some kind of at the forefront, it'll be pretty quick, and you're starting to see a little bit of panic as it is right now. But I mean, and the reality is, like, if you're calling for a crash, if you're like, oh, fucking house prices need to crash, Canada's fucked, like, and because you're like some like housing bear who's like pissed off that they didn't get in the market 10 years ago because Uncle Tony told them that the housing market was going to crash then, like that's shitty. You shouldn't be trying to like pray that the foundation of the Canadian economy, like it's like in The Big Short when he's like, oh yeah, congrats guys, you're rich, like now what's going to happen? Like, people are going to lose their jobs. Like, so the reality is we should be, that's the greatest outcome for Canada, for the housing market, for Canadians, is prices come down over a long period of time. It allows people to trade in and out, right? It allows people to establish their own investment theses, etc., right? Like to mitigate losses, mitigate risk, buy and sell in the same market. Whereas like if you sold in February and bought in March, you made a spread. Or if you bought in February and sold in March, you lost money because you're buying and selling in different markets.
Right.
It shouldn't be like fucking stock trading, right? It shouldn't be like, we need to, the government, central bank, whatever, needs to get it under control.
Yeah.
So hopefully they do. I don't know.
Well, listen, Danny boy.
Yeah.
You are my first real estate agent on the podcast. And
first and worst.
First and worst and best. And I appreciate you for coming on. I mean, family business, Foch family, baby. I mean, I've worked with your mom.
Yeah.
I've done some stuff with your dad. Work with your brother. Sent me an unbelievable plan for my backyard, which we're using. We got guys right out there right now drilling. And man, his drawings are sick.
Yeah, he's good.
And I mean, he sent them to me, and I was like, "Who does he think I am? Fucking Jeff Bezos?" Like, I've got like built-in barbecues, fucking shit coming from the ceiling, but it was unbelievable. And I know you do a lot of stuff on the finance side as well with Avina. Yeah. Anything else crazy going on right now?
Not really. Like I'm really optimistic on small cap development in the GTA. Like I think that the province's affordable housing task force report to me is really bullish for infill development, that they want to take away the keys from municipalities basically and make planning a province-wide thing. I don't know if Doug Ford will win the election coming up, but if the task force report, if that specific recommendation holds true, then infill is going to be a lot easier to develop. So yeah, I mean, for me, it's like trying to buy stuff like that, putting together like a small fund of guys who are doing little infill projects like that. So like, kind of like 4 to 8 units, because nobody's really doing that well. Like there's a pocket in the market right now where it's like stuff's too big for the small guys and too small for the big guys, right? It's kind of like your 10 to 50 million project size. So stuff like that is like really what my next focus is. And then like I also, I was on a podcast like last week, Gary Clute. You should actually check him out and maybe talk to him. You guys should do like a little crossover. He's a fucking awesome dude. But because he's just launching his, so you guys would have a good time together, I'm sure. But basically, I was like, I might actually like run for municipal politics just to like get some attention around this shit.
I would vote for you.
Well, get some young people out. Like our generation, like we haven't a big enough share of the population pie now that we should be deciding elections, and we're not, because we're too fucking lazy to go out and vote.
Before I had a dream of being a National Football League superstar, I would close my eyes at night and I was the president of the United States.
Right.
There's problems there.
Why don't we both run for municipal politics this year? I think it's good. If you want to run for your like ward councilor right here, like you'd get so many fucking deals out of that, dude.
Is it on?
It's like an excuse to go door knocking.
Listen, 100%. That'd be amazing.
And you got your fucking signs on everywhere. You can't go put real estate signs up on everyone's lawn today.
The only thing holding me back from being the prime minister
Don't say you have too many nudes on the internet.
Well, I guess there's a few things holding me back.
You're like, oh fuck, I do have to worry about that, eh?
The only thing holding me back is I'm pretty sure you got to be bilingual, right? So like I would have to.
Yeah, but you start with municipal. Go learn French.
But
nobody's gonna hire and you can't just like run for prime minister.
I think about that often. I'm like,
I would say I hate to be the guy to break this to you, but it might not be the only thing holding you back from being prime minister.
Well, no, okay.
There might be a couple of other
steps
things
in the, but I can see it. Real estate agent.
Drama teacher.
Get bigger in the space and grow in the space and build a big.
That would be the Canadian dream, man.
And then get into like helping out with the markets with housing and whatever and policy, and slowly creeping my way up there. And like next thing you know, I'm vice president and the president dies and I step in.
Okay, I can tell you as a real estate agent who is like relatively frequently quoted by the media on housing policy stuff. Nobody gives a fuck what real estate agents have to say about housing policy. Just to say.
No, I'm sure, but that's why. But that'll be my stance.
Right.
And that's how I'll win the election.
I don't know. Yeah, it might be a bit of an uphill battle there.
All right, brother. Well, this was fun. As always, I learned a lot. Guys, follow him on Instagram, YouTube, Twitter, whatever it is.
Just Google me, like you can. Yeah, you should be able to
Foch.
Yeah, Foch. Like
Foch.
Like Foch shizzle without the izzle.
It's a pleasure. Keep doing what you're doing because you're giving us all the knowledge that we need. And I'll keep translating all the smart dictionary words that you use.
I feel like since I got on TikTok, I've been like pretty good at
really.
Yeah, just dropping
I'm
it
not
down
on TikTok
little,
as often right now. I got to get back on my game, but I will. We'll take a look through your videos.
Do some interpretive dances together.
Little dances.
Yeah, I was doing ribbon dances with charts and stuff like that. So it's been good.
And that's been Down to the Studs, people. It's been a long time. Now we're back. Thanks, Danny boy.
Pleasure. Thank you for having me.